Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors. Welcome to this Wednesday morning edition of Benzinga's Pre-Market Prep. I'm Spencer Israel. As always, I'm joined by Joel Elconin and Dennis Dick on the show today. Our guest will be Jeff Hirsch. He is the author of the Stock Traders Almanac. But before Jeff joins us at 8:35, we got to get through the headlines of the day. That includes Target's earnings. They beat and they raise, and it doesn't even matter because you can't report on days like today, or so says Dennis at least. We'll also recap the biggest 13 F filings from yesterday after the bell and get to your questions in our chat at premarket.benzinga.com. Joel, what's going on in the markets?
Oh, our fifth down open in a row. S&Ps are off 10.5 points. Big support on the downside, 25.62. That is your overnight low. You can look on your daily charts and see we've had 4 lows in this area. For your spy-minded people, let's just call it 256.25. Crude has come off hard off that upper $57 level, now trading down 50 cents at 55.10. And gold up 250 at 1285.30, trying to get back over 1300. Silver back over $17, up 6 cents at 17.13. Dennis, are you surviving all of these down opens?
It's a trend, Joel. You identified this trend yesterday. Congratulations for identifying that trend yesterday. We should all have been listening to you and coming in short today because we'd be making some money here right now. Good call, though, on identifying the trend yesterday as 4 down days in a row, because it doesn't feel like 4 down days in a row because we keep bouncing back, or at least, coming back somewhat. And it hasn't been a significant decline. We're still sitting up here fairly close to the all-time highs. But looking at the SPY chart, looking at the S&P's chart, it's a little concerning here. I'm looking at a little bit of a head and shoulders, but not only that, you're seeing a level that we absolutely need to hold.
Yeah, and we've knocked on it 3-4 times here. Basis, the spider, it's 256. We got down there again this morning, trying to rebound again. So we will see if that overnight low or early morning low can hold here. On the upside, we got to get green in this session. 10.25, 78.25. 78 even was your close, and that was right up against the intraday high for yesterday. So street kind of leaning the wrong way into the close here. We'll see if they can bring back during the day. But let's talk individual stocks, individual earnings, and what do you say, Target?
Yeah, definitely. Let's go to Target.
At Target, a store that I frequent whenever I can, TGT reporting yesterday after the bell. This morning they reported Q3 adjusted EPS of 91 cents. That's a 5-cent beat. 86 cents was the estimate. Sales of $16.667 billion versus $16.6 billion, so a slight beat on the sales number. Comps were up just under 1%. So all in all, a good Q3. They're also raising their outlook for the fiscal year. They're raising their EPS by 6 cents on the low and high end of their range. And their Q4 EPS guidance is coming in higher or in line as well. Comps are going to be flat to up 2% for the current quarter for Q4, which all in all, great report. Beat on Q3 earnings, raised their fiscal year EPS. So what are we doing here?
This is, you can't report on down days. You report on down days, this is what you get. You get down stocks. But it's funny how this, it's all about sentiment towards the earnings reports. And if we were up big here on the S&Ps today, I think Target might be having a different story. But if you look, everything that reported here today is trading in the red here, with the exception of Children's Place, where it seems like that stock just goes up no matter what. Also Square, with the exception of that, because that stock goes up no matter what too. But everything else, it's a tough day for stocks. So it's a tough day to report. The targets, the numbers aren't great. I wouldn't say I'm going to say they're awesome or anything like that. When I see comp sales at 0.9%, I mean, it's not like they're blowing everything away, but it's not a disaster. So I would think that would be good enough, but not today. Not in this case. The target's trading down the pre-market 3.6%.
Just real quick on the levels here. After the report, you had a spike. Well, it actually went straight down to 56.69. Now trying to break back into the $58 level. I will be keeping an eye on that 56.69 because we've tested in 3 different brackets. And then going back to October 10th of this year, 56.58 was your low. So there's your buy zone here. Underneath that, things get pretty slippery until under $56. But found buyers there this morning, back trying to get over 58. We'll see if we find buyers again if we get back down to that level.
We do have Walmart pulling back a little bit with sympathy here this morning. WMT. What do they do to report? They're coming, aren't they?
I think Walmart is next week, but let me confirm for you real quickly. In the Pro, Walmart is reporting on the 16th before the bell, which is tomorrow.
16th, which is tomorrow. So they're coming tomorrow, Walmart. It's going to be an interesting report because you look at Walmart here, it's been running up into it. It's near all-time highs. It absolutely needs to blow it away to go higher. So it'll be interesting to see. Sentiment towards Walmart is so positive. It's almost can be in the Square category. All these other retailers have not done well at all. Walmart, not one of them. It's all about Amazon and Walmart now. Somehow Walmart turned their whole sentiment towards them around last year when the stock got down to 56 and everybody's like, oh, Amazon's eating their lunch too. Even the whole grocery thing when the stock went down that one day when Amazon bought Whole Foods and Walmart went down to $73. They turned it around. Market likes Walmart now. Now they say, oh, well, it's both Walmart, Amazon, and Walmart. So that's what these retailers need to figure out. They need to figure out how to be associated with Amazon, not against Amazon. And, Walmart now is, the online store and doing everything right. And, somewhat Amazon-proof, people are saying. That's what they always say when stocks are all-time or near all-time highs. But all I'm saying is when it reports tomorrow, it's going to need to do something pretty good to continue going higher because a lot of good news is already baked into the stock.
91.98. That is that your all-time high? That's right. In share.
Is that an all-time high for real?
Let me look here.
Let's go look.
We gotta go monthly. I don't want to.
You got to go way out. Go way out. 90.97. I see on the 2015. What if we go? Was there anything before the financial crisis that was higher than that?
Nope. So
we're at all-time highs, basically.
Right.
It's always funny how those all-time highs work right under those whole numbers there, too. So think about that.
I was just going to mention that. Any sellers at the point? Can you see that?
I can look here. Hang on. I'll try to see. I don't know. That's a long ways away. And the book only gives you so many levels here. I don't know if you can subscribe to a longer depth of book quote. I've never been able to find. 91.95 it only shows. So it doesn't quite show me the 92. I do see 12,000, 91.50. But there's people sitting there at the point. I bet you there's 100,000 shares or at least 50,000 shares sitting there at the point.
Oh, Square's Cash app lets users buy and sell.
Don't give it away. We're coming to that. You're ruining everything.
I'm sorry.
I was coming into that. You're taking away. I was going to have a nice pun with it and everything, and now you ruined it.
Sorry, Dennis.
I was saving the best for last.
Oh, okay. Man.
Anyways, might as well talk about it now, Spencer. Do you want to tell us about Square? Because they mentioned the B word.
I'd actually rather you say it because you seem very enthusiastic.
Go ahead, Dennis.
All right. So Square may take Bitcoin. That's why it's up so much. When you mention the B word, that's the best word you can mention in this market, the B word. And Square mentioned it here, and that is good enough. Square Credit Suisse is saying they may get a boost from adding a Bitcoin option, and that is why we have them up significantly here in the pre-market. It's trading up 3%. Who cares? Honey Badger stock, the stock seems to go up no matter what the market does. But when you say the B word, you flying.
You're going. That is a new all-time high in Square. Pre-market high 41.28. We've just backed off for there. So that's really the only number that you can have is 41.28. Went up there and 2 different brackets here after that news came out, trading a little volume as well. In order to get to yesterday's range, you really don't have that far to go. 40.50 fills the gap. So I think you'll find some buyers there. And all-time closing high, I don't know what's going to happen with the overall market or if the euphoria will wear off after this, but your all-time closing high is 39.98, and that was made on Monday. So Square getting into the Bitcoin.
Yeah, this was Credit Suisse saying this, so this wasn't Square saying this. They're saying that they may add that option in analysts. I'm just trying to read it here, what he was actually saying. Makes it easy to buy Bitcoin. That's a spark that lights the fire under this thing with the masses. So yeah, it's basically, yeah. So we're obviously just saying here, and that was from a tweet from somebody else too. I mean, you mentioned Bitcoin and people just buy the stock. What was the stock the other day somebody mentioned Bitcoin on? And it was
OSTK.
OSTK. Well, OSTK, that's been one that's been feeding off it for a bit. Maybe that was the one we were talking about. But I mean, you mentioned this is a possibility they're going to accept Bitcoin. Everybody's excited. That's why it's trading up here. What I will say is, you do have some significant resistance up. Every point, every whole number in Square has been resistance at least at one point in time. It's not surprising it's starting to struggle with the next whole number, which is never taken out. It's an all-time high this morning, 41. So it takes out 41, you think 42. Takes out 42, you think 43. Traded in the whole numbers. When stocks are making new all-time highs, that's the best thing you can do is just look to the whole numbers, because usually if there's institutions, and there has been on Square, seems like there's 100,000 every point, and that's what an institution will do. It has a million shares. They sell me 100,000 at 39, 100,000 at 40, 100,000 41, 100,000 42, 100,000 43. Sometimes they show their hands, sometimes they don't. But those 100,000 share orders are significant resistance, because think about it. It takes over $4 million to take out a 100,000 share order on a stock at $41.
All right. Sorry for that segue, Dennis. Get back.
That's all right. We ought to talk a Square and the Bitcoin, and I still love Square. I'm still a Square fan here. I did not play it overnight here. I should have. But you know what? It hasn't been having the buy imbalances, so I laid off the last few days. And actually, a couple of these days it opened down. Shouldn't have laid off last night. I know my buddy over there, Bright Trading, bought it at the close, and he's probably pretty happy this morning as it's trading up 3%. But it was a trend for a while. We'll have to watch those imbalances, see if they come back. But man, this Square has been a monster stock.
Yeah, it has.
All right, where do you want to go? We got more earnings.
Children's Play?
How about a good report?
Where would you like to go?
Well, Place, PLC.
Okay. PLC reported this morning as well. Q3 adjusted EPS, $2.58, which is an 11-cent beat on the estimate. Comps up 5.1%. Sales, $490 million. It's a $10 million beat on the estimate. They're also raising their guidance for the fiscal year. They're raising their EPS outlook about 23 cents.
It's a nice move. I don't know what it's done in the pre-market. I haven't seen the pre-market trading, but I'll just say the level that jumps out to me before even looking at a pre-market chart is 120. What's it done in the pre-market?
Oh, Dennis, you looked at your pre-market chart.
I did not. I looked at my daily. What did it do in the pre-market?
120 is the high.
We got to start just throwing out those orders. And when you got a level that just sticks out like a sore thumb like that, these levels are big. Now, if it gets up there now again, then it's the second time. And I always say the third time's a charm. Something we don't talk a lot about on the show, but a lot of times say there's no such thing as a triple top or a triple bottom. I tend to agree with that. It seems like when it goes up to a level for the first time, it fails. Goes up there again, it fails. Goes up there the third time, then sometimes it takes it out. So, you just got to be weary when, we've already been up there once in the pre-market. Gets up there maybe the first time in the intraday session, maybe it holds. Gets up there again after that, maybe it takes it out. But the 120 level, absolutely huge for PLCE. Sticks out like a sore thumb. Just like Harlan Pyan says, when you bring up the chart, what level jumps out at you? And if you look at the dailies, it's 120.
All right. I just want to give one other level there. Besides that, that was your former all-time high. That was 119.45 with an all-time closing high of 118.15 on that the same day. So, keep an eye ahead of that. I call 119.45 to 120, in a resistance zone and in a higher place stock. And oh boy, that's not the all-time high. I missed it. What was it? 125.30. Yep. Yeah. But snuck up over 120 on a few different occasions, and then really caught a cold there. And just to clarify, Rachel Shasha, I think she was trying to get. I don't think she had taken a position in it yet, but. She was talking bearish on it.
No, I remember her saying she was not in it. I remember her saying she was not in it, but she didn't. She won. I think, didn't she say she wanted to be bullish, but she was just waiting?
Was it bullish or bearish?
Well, she was bearish now, but she was waiting for the turn. I could be not remembering correctly, but she was bearish for sure. I trying to remember waiting for it to turn around or waiting for, but. You have to. That was our show from last Monday. If you want to catch it on YouTube or on SoundCloud, she was on there.
Buzzy says bearish. Okay, jump over here to the two solar stocks report this morning. We'll do them together.
Sure.
JA Solar, which is JASO, and Jinko Solar, JKS. Again, you can't report earnings today, or you probably go down unless you're Children's Place. Both those stocks trade lower in the pre-market. I've not looked at the numbers. How are they? JASO and JKS.
JSO 13 cents versus 19 cents. Sales 650 million versus 609 million. So a good sales number. Total cell and module shipments for the current quarter will be in the 1600 to 1800 megawatt range. And Jinko was the other one. JKS. They reported. Wait, Jinko reported? They weren't on my calendar.
They're down. I think they were supposed to report. Maybe they didn't. Maybe I'm wrong, but it's trading down 70 cents.
Maybe.
I can take a look.
No, they're next week.
Oh, okay. Well, I had it on my calendar too. I thought those two stocks were reported, so my calendar was wrong then. Anyway, it's trading down significantly in the pre-market with the JA Solar news then. So I guess two people are pairing those up. And neither of these stocks mentioned Bitcoin this morning, so they're trading down.
All right. This is
if they had Bitcoins on the solar panels, man, that would be the stock dome. If they had Bitcoins just glued up to those solar panels, man, everybody would be in there.
17.15, 17.16. I mean, you got lows all over the place in the lower $7 handle. You can see all these lows here. Pre-market low, boom, is 7.26, only a 13-cent bounce here. So don't have a real good feel for this one, but watch out for that pre-market low. See if you find buyers down to 7 even.
Last earnings stock talk about Beazer Homes reported there last night. It reported last night, so it's getting a pass. It was trading up last night. These home builders have been on fire. It's stocks we haven't talked a lot about on the show, but they have been coming back since the bottom in 2016 when everybody was throwing these things out. I mean, Beazer Homes, in the beginning of 2016, when we had our last, official correction, because we fell more than 10%, got down to $6. Now $22.75 bid here this morning, trading up over $1 in the pre-market. Spencer gives the details. Home builders monsters.
BZH $1.03 versus a 54-cent estimate. Sales of 673 for $639 million. So a beat on the top and a beat on the bottom.
I don't know. What do you say, Joel? This thing's just been on fire, but is it too much? Can it keep going? What's up? Why are the home builders all of a sudden, in the last year, so hot? Why? Is it because interest rates are starting to climb up? That doesn't make any sense to me. What's going on? I can't understand. Just the bull market?
I have absolutely no idea.
KB Homes is $28. It was $15 to start the year. I don't know if anybody had these home builders pegged to go up 80-90% this year. Toll Brothers started the year around 30. It's 47 here now. If you go over to MHO, which is MI Homes, it started the year around $23. It's 34. It's home builders, man. They're back.
All right, let's do.
David East says the housing market's on fire until the Fed puts the bullet in it with the interest rates going higher.
All right, I'm just going to put that. You just mentioned a bunch of stocks here. 41.59 has been the high of the move in XHB. You can also draw a little. This is a daily chart. You can also draw a nice little trend line here going up, a pretty steep one at that. But that trend line comes in right at the lows from yesterday in XHB. If anybody is trading that ETF, just be aware on the downside, a bunch of lows here. Actually, it's a triple bottom, 40.72, 40.76, and 40.77. Flat on the session, high of the move, 41.59.
Let's go to some movers. Actually, there's a couple stocks on the chat. I'll go there first. Foot Locker, somebody was asking about. It does report earnings on Friday. We can preview it, though. And this is a retail stock, that I've kind of been eyeing up. You want to know why?
Why?
Because this thing has not caught a bid at all. It's got earnings coming up. And if they say anything remotely okay, this will get a pop. Now, if they pull a Dick's Sporting Goods, then it's not going to get a pop. But, actually Dick's came back too. So, Dick's held those lows. I don't know. The dog retailers, when they've been reporting just anything, if they come out and just say, hey, we think we'll be flat next year, the stock will fly. That's good enough. So all you got to do is not completely say, okay, it's going to be a disaster. Now, that being said, we know Foot Locker last quarter had an epic disaster. So when it went down from $47 down to 36, but I don't know. I almost feel like trying to play this one long because if it says anything okay, this could be a $34 or $35 stock. If it reports a disaster, well, then all bets are off. So it's, I guess, whether you think it's going to be a disaster or not. I don't think it's going to be great, but I think it could be good enough. That's why I'm kind of interested in Foot Locker going into the report. Maybe I have to check out some calls, some outside money calls on that one.
Okay. All right. Or sell puts if you really want to own it, Dennis.
No. You want to know why? Okay, so a lot of people say, well, if you're going to buy calls, why not sell puts? Because you have those epic disasters like last quarter, and then maybe we're writing the 43 or 44 for $1, and now the stock's 35 and you're eating 8 points. That's what I don't like about it is these retail stocks tend to punish put writers.
You got a buyer here. Let's move over to Foot Locker here. You had the big gap down after the last report.
Joel? Did we lose Joel?
I'm here.
Okay.
What happened?
We had a glitch in the matrix. We're back now.
It's
okay.
It's the internet. 28.42. That is the low of the move, and that's been targeted on a couple different occasions. On the upside, man, this chart looks weird because you go up and it's like, 37.50. I mean, it seems like it would take forever to get back there, but keep an eye on the low of the move. Also in Foot Locker, short-term resistance for now is at your double top at the 31. Just call it 31.40. That's your resistance for now.
Okay, jump over here to AT&T. Somebody in the chat wanted to know about AT&T, what I think about it. I own this in my invest portfolio. It's a very small position because what happened was I bought AT&T way back in the day, and they spun off like I've had this for like a decade. They gave me like AT&T Wireless. They gave me this other stock. It broke up into like 4 companies, and I got all those companies out of it. That shows no, Lucent was from way back. That was that was farther back. But AT&T has spun off companies over the years. If you own a long time, you own a lot of companies just because. Anyways, I don't even know where my cost basis is on this thing anymore because it spun off so many companies when they did that AT&T Wireless, and I can't even remember the other two companies. I think it was Comcast. Didn't they have shares of Comcast too?
AT&T also did a big reverse split in the 90s.
They've done so much stuff over the last 20 years, and they've been paying lots of dividends over that time too. I have no idea where my cost basis is on this. I think it's probably in this ballpark, but like I said, I think I paid like $37 or $38, but I got AT&T Wireless, I got all these other companies, and those were all worth money too. So if you knock that off your cost basis, it's a lot lower than that, obviously. But I don't know. It's one that's been in there forever, and I look at it and I'm like, yeah, I like the dividend. It's a small position now, but 5.78% is a nice dividend. But you know what? I just don't know in the long run, and that's why I'm always doing my invest portfolio. If phones aren't going to be, there's going to be communications a lot cheaper. It's very competitive, and it's going to continue to get more competitive. Now, everybody's still got their cell phones, and I still have a $200 a month bill for my 2 cell phones as well. But I just see those costs going down in the future. I see it getting more competitive, and that squeezes stocks like AT&T and Verizon, and that's the bearish argument against these companies. The bullish argument is everybody's going on their cell phones. These things are just going to, be cash cows forever, and that's all it is. There's not much growth there. It's just a cash cow. The question is there eventually a time where they get squeezed so much that maybe that dividend isn't safe? I don't know. So that's where I am on AT&T. They buy Time Warner. I mean, they're all over the place. They bought DirecTV a while ago. So we know they got a lot of cash. It's because it is a cash cow, and they like to buy companies with that cash. I just wonder if they're not getting too big again, with this Time Warner deal too. I'm almost turned off on it, that I'm getting to a point where I might think about selling it.
Shorter term, you do have a lot of highs in the same area. So if you're feeling that you'd rather try and buy this on strength instead of weakness, folks, just keep an eye on the 34.50 level. You've had 2 highs at 445 and 448. So after that, it would be, do have some air up to $35 area. coming back down. If you want to be a cheapo like me and Dennis and you want to buy some more, maybe wait till it gets back under $33. 32.55 was the low of the move, and then that was backed up by a double bottom as the institutions targeted 32.70 area. You actually had a three lows in a row there: 32.65, 32.71, and 32.78. So I don't know. I know this thing just went ex dividend a while ago, Dennis. Maybe if you're looking for a shorter term swing play, maybe 2 or 3 weeks ahead of the dividend, see where we're at.
It's all this Time Warner stuff that's really, like really here's cool. TWX down again here today. I mean, you could say what you want. This market is starting to price in like this deal is not going down. I mean, there's 20 points on the table now. So, the play was at 102, 103, when, to short the Time Warner. Now you get down to, a spot like this, and it's $85. The one thing I argued here on the show last week, though, when it was $87 or $88, is that actually I think it was around 91. Is that I think if this deal doesn't go down, I don't think Time Warner just goes back to 80. I think it could go down to 75 or even 70 because they've hit media stocks.
Oh, they've hit them hard too. I don't know,
like the Viacom and stuff. And it's a better company than Viacom. And Viacom's been running really bad, but I mean $24 now. When this deal was officially announced, like let's just use this, and actually go out to the charts to prove my thesis here. When the Time Warner deal was announced, TWX, you can see the big gap up when it went from $78 to $81. That was back in October 2016, so 1 year ago. Viacom back then was $35. Now Viacom is 24. Fox back then actually, if I'm looking, was around the same price. So Fox hasn't done much. House of Mouse, Disney. Well, okay, maybe there's a hole in my thesis. Maybe it's just Viacom. What's the other one? Discovery, DIS. Well, DISCA was a lot higher. It was 24. Now it's only 16. So they haven't done great since then. But I don't know. I think if the deal comes off the table, I think it's below 80. Maybe risk reward is there, but I don't know if this deal's going through.
CBS too. I mean, that's come on a little bit off its high. 70.10 was the recent high that it had in April. So those stocks have come off. I mean, what you want? I mean, would you wait to where it was before? I don't know. I mean, before it got to the big pop off the deal, it was at the 77.50 area. So you could see the big move off that. Initially, Dennis, you traded it that day, didn't you? Try a short?
I did trade it that day. No, actually, I was able to. I traded it long that day. It popped up, and then they didn't have the price out yet, and then the price broke. And actually, I think I had a really good trade off that. I think I made 3 or 4 points. Yeah, I did trade it that day. I remember that day. That was one of my best trades of the year. I traded with some size too, and I made like 3 or 4 points.
Well, I just want to alert our traders that we are back on the comeback trail here. As usual, we hit those series of lows at the 62, 63 area. Coming into an important juncture here, I like to look mid-range on the day basis the 24-hour market. That's where we're at right now, 69.50. So here we go. If you caught an early long here, warning Will Robinson here, 69.50 mid-range on the day.
The only other stock I had on my list to talk about was, they're talking Roku in the chat. We'll get to that in a second. But what you mentioned this morning was Amazon, Spencer. And what was this news with Amazon?
Yeah, I was actually about to bring it up.
Yeah.
We were sort of in the same boat, but Amazon has scrapped, reportedly, at least according to Reuters, have scrapped their plans for a bundled video service. This would be like Amazon's own independent online streaming service where you can get, just for hypothetically, you can get, a channel from Viacom. Let's just say you get the Food Network and ESPN and 10 other channels, and you package it together, and that's your cable package essentially. And that was going to be Amazon's version of that, which we already have bundles from places like Sling TV has a bundle, CBS has their own bundle. Amazon was going to have their own thing. They're not anymore, at least for now. They could change their mind again, but for now they're not going to launch their own video bundle, which is good news for people like I guess Netflix. And Roku, not great news. Or actually, yeah, it's good news for Roku. It's not great news if you're one of these cable providers and you're looking for someone else to your content, pay for your channels. So Amazon, I guess, what they couldn't get. The way it works is these cable companies, the Viacoms, the 21st Century Foxes, they like to package their crappy channels with their good channels. Like if you want the good channel, you gotta get the bad one too. And
Yeah.
Amazon didn't want to do that, so that's just they're out of the game for now.
Amazon down 6 points. That's just with the overall market here, so I don't think it's that headline there. Netflix really not responding to this either, because if you think it's okay news for Netflix, they're actually trading down $1.50 here too. So macro markets obviously more powerful than that individual news there. What do you think of the Netflix chart?
I was going to do the Amazon, but I'll do the Netflix first. I have not looked at that chart in a long time. Let's see here. I mean, on the downside, I mean, 190. I mean, that's all you need to say. That hit 204.38. I believe that was on right before the report. And then we sold off here. You can see we bounced off it 3 days ago. Had a couple other lows there in October. So, holding on long term. Just don't want to see it over 190. And then let's see, you've had a 14-point break, right? From 204 to 190 here. So 197 is my number on the upside, as that represents a 50% retracement. Haven't quite got there yet. The high of the move has been 196.05. So in my eyes, if I'm a long Netflix, I want to see it get back up to 197. Hold 197, plow through 200, get back above that psychological $200 level. But 197 is what I'm looking at here. I want to see it get above that and keep on going. Amazon, the thing just keeps on going. Made a new all-time high 2 days ago at 1139.90. Whole number, Dennis. Are you the one that was selling it 1140 there?
Not me.
Kept a lid on it. All-time closing high from yesterday too, 36.84. So that's the number I'm looking at ahead of that all-time high at 39.90.
I mean, FANG is holding up this market.
Yep.
It's the whole market really now, and these stocks have not. If you look at the S&Ps, they're just hanging there. And if you look at FANG, it's hanging there too. I mean, if you want to just go and do them all here, because we just did Amazon, Netflix, like I would go to Facebook here now and look at it. That 176.71 low, that is the level that it needs to hold. You have three lows right in the same area around 177 from the last few days, and then you have the pesky low 176.71. It needs to hold that. If it doesn't, then that one is in trouble. We know Apple has already started collapsing. It had 3 points down yesterday. It's down another buck this morning, despite Warren increasing his position in it. So last night Apple was trading higher a little bit because Warren Buffett actually increased his position by 3%. I was announced some 13F filings. He also decreased IBM, which we never got to. But Apple's actually trading down and not caring about that news here. And we've got Facebook now flirting with that low as well. Amazon is holding up, and it looks like it's well above support yet. And Netflix, I would just say 190 is the level, so it's well above that area too. But Facebook's got a big level it's going to challenge.
Yeah, Google spiked up, made that high on the date of the earnings report, 1048.39. Probably trading in the red here a little bit, but you're right, Dennis. FANG has been supporting this market. Come on, Google chart. Let's see if we can get the 15-minute here. We're humming along. Consumer price index unchanged there, up 0.1%. Doesn't seem to react to it. Spencer, we're at 835 here as the S&Ps have pulled off that 50% retracement to a T. Recent high of the move 69.75, back down at 25.67. So, Spencer, who we got coming up?
Jeffrey Hirsch is the editor-in-chief of the Stock Traders Almanac, really great student of seasonality trends. We're going to get Jeff on after this break, so sit tight, and we'll be right back.
Joel, around the break.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Spencer Israel and Dennis Dick, and we are joined by Jeff Hirsch of the Stock Traders Almanac for 2017, the 50th anniversary edition. Jeff, how you doing today?
I am super. How you guys doing?
All right, so I'm looking through my almanac here, and I'm looking at all the things, and all you need to do, why don't you just put every day, just buy, just buy, just buy? Because because man, oh man, I know you follow historical patterns in the markets, but holy cannoli.
Unfortunately, nothing works 100% of the time, including every single algorithm and every single seasonal pattern. And we've been on a unprecedented tear here. And I think a lot of that has to do with what's going on around the world and what's going on in Washington, which honestly, not a whole lot. And I think Wall Street likes that. You know, they're not really convinced that the administration or the Congress is going to get a whole lot through, and therefore the playing field stays the same, and we just go along, you know. And that's what's been happening.
Yeah, buy the dip has been it. Now, I know you're seasonal. I mean, we've had, I think this is our fifth pretty good down open in a row. I'm looking at some of the patterns for November. I mean, this is just setting us up for the Santa Claus rally of all time here, just giving you an opportunity just to buy everything in sight, or is the market's going to throw us a little hiccup this year going to the end of the year?
I don't know about of all time. I think some of this weakness is coming off of a really great worst 6 months, which has historically been a good sign for the next 6 months. I think there's an opportunity for getting long further. Normally we have a dip in the first half of September with tax loss selling, but things are starting to unravel. I don't think anything's really going to break until something either exogenous or systemic internal knocks things for a loop. But we've got, sentiment through the roof, valuations are getting extended, rates are going to go up, the midterms, election campaigning is starting to heat up or is about to. So I don't think we're going to have the Santa Claus rally of all time, but I'm still thinking that we've got some more upside, and I really don't expect any real break in the armor or in the market until later Q1, maybe in that March to June period where things are July, where things start to roll over in the midterm year. So that's what I'm looking at.
Yep.
Sort of near term out in the next year.
I mean, I got the monthly chart up here, and you could probably answer this better than me. We've had one down month in 2017 here, and that looks like that was March, and now have you seen a pattern like that in the past where you've had at this point working on two today or perhaps in November,
right? But
one down month in the entire year?
Happy days are here again, man. It's not common. I mean, it does remind of some of the the really bullish days after the Depression, the bullish years after the Depression when Roosevelt came in. But it's almost eerie, like the calm before the storm, like we're sitting in the eye of some hurricane or something. But it's going to continue to go until something breaks, and nothing's really stuck, whether it's Mueller-Russia investigations or North Korea, or even some of the horrific, attacks that have happened. That stuff's just upsetting. But the market seems to continue to just ride the fact that there's not a whole lot of other places to put money except in the equity markets. Things aren't so bad; they're pretty good. We've got some hiccups here and there with GE and other things. But, U.S. equities, I mean, the other thing that I find interesting, there's a lot of stuff on sale retail-wise right now.
Oh, yeah.
I don't know if you can buy anything from underwear to winter coats, and it's usually the kind of sales you see after Christmas. So they're continuing to pump this thing up in the retail sector, in the consumer sector, as well as, on Wall Street. And, there's some things that are starting to break down.
Let's talk about
get
that.
A little weak here, but
let's talk about some of your trades, whether they're seasonal or technical based. Let's start with some things on the short side.
Short term or going short?
Going short.
Good luck with that. The one short that we have easily coming into this period is energy, and it's maybe it's starting to work right now. It's gone against us, so I'm not seeing a whole lot of short trades out there.
Okay.
This is the time of the year where we get long. Back in March, April, May, June, we were looking at some more shorts, but we've come out with our annual stock basket, which is a combination of fundamentals, technicals, and seasonals, where we put the entire stock universe through a fundamental screen for revenue growth and acceleration, earnings growth and acceleration, a bunch of valuations, price sales, earnings, cash flow, all that kind of stuff. And then we look for performance versus the S&P. Then we roll it into charts and look for buy points and some other, just proprietary type things. We also look for things that are underfollowed. And, our big winner from last year, just an example, was Arista Networks. It's up almost 200%. And that was picked in October of, 2016. And, here we have, and I do own some shares of that myself. So, that's something that, we're looking for. We weed them out. So the current basket was released about a month ago, looking for some buys on dips. You've got stop losses, buy limits in there. So, give you a few examples. None of these are currently in our, personal holdings just yet, but in the mid caps, there's some homes, Kiwi Homes, LGI Homes, Meritage Homes. You can see a few things like that in there. Toll Brothers in the large caps. A couple of finance things. Last year, we picked a bunch of regional bank stocks, which did quite well. So, combining the seasonality with a solid fundamental screen and some technical analysis has, turned this portfolio to be quite an outperformer versus the S&P and the Russell 2000 by a magnitude of 3 or 4, depending upon which index you look at.
Jeff, I'm just looking at all the charts, and Dennis Dicker, I'm just looking at all the charts, individually on, some of these, S&P components here. And you look at a lot of stocks, and a lot of sectors actually look broken. But you've got the FANG, the Facebook, the Amazon, the Netflix, and Google that just continues to hold this market up. I mean, obviously, G is the most broken stock that there is, and that's its own story in itself. But when you start looking down, you have a lot of other stocks that, haven't performed well. You've mentioned retail. It's supposed to be traditionally a good retail season coming up here. But, most of the stocks are in shambles. There's a lot of stocks that are really weak out there, yet the markets continue to hold up because of those big guns. Is that concerning to you?
Most definitely. We've been writing about it. We posted yesterday about the underperformance of the Russell 2000, which is, that broad stock participation you're wanting for. And we've seen some breakdowns in advanced decline lines, and it is concerning us. But, I think as my friend John Person said once, I'd rather be a cautious bull than a penniless bear, or something to that effect. I'm probably not doing it as the justice that he did, but that's what's going on here. I'm concerned about the technicals. I'm concerned about the political cycle. I'm concerned about what's going on around the world and the valuations and the Fed. We're going to get a new Fed chair. That's going to be the biggest change for the financial markets that we've had a long time. And I'm concerned, but you can't fight the tape, and that's one of the most golden rules out there, but you got to be ready to move. I mean, we still hold some cash. We're still waiting. That brings us to the best 6 months or worst 6 months, or, annual best 6 months seasonal MACD buy signal. We haven't had that. We came into the month of October, with the signals for the different indices not in agreement. We look for agreement across the Dow, S&P, and NASDAQ before making our call, an agreement between the fast and the slow MACDs, so that we're not, the buy isn't signaling a buy and the sell isn't signaling a sell at the same time. And it's been vacillating all month long for October, and here we are, things are getting negative. And now with what the futures are, down 100 points last I looked before you guys called.
Yeah.
Maybe there's some validity to listening to that proven technical indicator, and that's showing some signs of weak this year. And if it's it doesn't, the market doesn't give us the signal, we're not going to take it, and we're going to hang on to some of our winning positions that continue to do well, and we're going to keep some cash, and we're going to keep some of the defensive stuff that we're still holding, some gold and some bonds and things like that.
What about those retail stocks? Because traditionally, this is the season for them usually. We're coming in November, December. This is usually when you see stocks like a Macy's, a Kohl's, a Nordstrom, and, a lot of these other retail stocks get a lift. We haven't really seen that yet. I mean, we've had a little bit of a bounce there off the earnings there last week from, Macy's and Kohl's, where they weren't complete disasters. But, even in those earnings reports, those weren't great earnings reports. It's just they weren't as bad as the market maybe was expecting. Do you think there's some more, maybe potential, a rally here coming up just from the seasonality play in the retailers?
Well, yeah. I mean, there's a seasonality play in the retail sector as well as a host of other sectors. I mean, this is when all of those sectors are in bullish mode, and we've got buy limits on there. If we get our max decent, not if, but when we get that, we'll go ahead and go into there. But just, I find it much easier to go to Amazon and buy things with my American Express reward points with a click of a button and going out to Kohl's or Macy's, unless I got to really try something on with my big rugby neck, Other than that, I'll go ahead and I think go to Amazon. I think that's what's going on. I mean, it's a broken record story, but that's what's troubling all these retailers, and they keep fighting for us to get there with all these sales and stuff. So maybe I'll go out once or twice a year and hit the stores, but I think, like most people, we're just doing it from the comfort of our desk or home.
All right, we're on the line with Jeff Hirsch of the Stock Traders Almanac. Jeff, before I let you go, I just got to ask you, where's going to be the Bitcoin section in the 2018 Almanac? And can you just
well,
go ahead? I got to hear what you think about it.
Well, the 2018 Stock Traders Almanac is already out. It is being prepared to be shipped to our subscribers from our warehouse. I have my author's copies in my hand. And if you turn to page 30-something, when I updated my, the super boom forecast I put out there, which is now 38,820 by the year 2025, that came out in 2010. Everyone thought I was a little bit crazy. Now it's looking like it's pretty close to, believable. So actually on page 40 and 42, I update the super boom forecast with my long-term chart of 500% moves and the market following inflation and my projected, projection from 2011. And then on the next page, the thing that we deem triggers this, aside from end of war and inflation picking up and functional government, is something we've dubbed a culturally enabling paradigm shifting technology. And in this little article on all the possible things, I discuss blockchain, cryptocurrency to create a new monetary system like paper money did 500 or 1,000 years ago, helping pull us out of the dark ages. So that's the hat tip I give to Bitcoin. I think it's more of a tulip type trade in just Bitcoin itself, but I think the technology, the underlying technology, is redeeming and will be helpful and beneficial to financial markets and other data tracking systems out there. It's a little bit over my head technically, but it looks like there's something there. I think it's being picked up as a secure way of doing business and handling data.
So 7,500. I mean, I know are you doing any price projections on it? I mean, Fibonacci extensions, retracements, or are you just hands off?
I'm personally not touching that with a 10-foot pole.
Okay.
Not to mention an 8-foot Hungarian.
Okay.
That's not my thing. I'm looking at reportable numbers that I can prove, quantify, or at least cross-check coming out of a 10Q, 10K for the kinds of stocks I'm in there that I'm looking at. So Bitcoin's an interesting thing. I know a lot of speculators. I do participate in Victor Niederhoffer's spec list, and there's been a lot of chatter about Bitcoin out there. I know people are trading it and doing well with it, but that's not my bag.
All right, one more coming out seasonality here. I got talked about Thanksgiving trend here, shortened trading day on Friday. Just a real quick Thanksgiving seasonal pattern for our listeners.
Well, the week before is more bullish these days, and we just put a little post out there on the blog a couple of days ago if you want to check that out. But coming into Thanksgiving week, what we found is, when we put it out in the 87 Almanac, the Wednesday before and the Friday after were up like 43 out of 45 years. And we published it in the 87 Almanac, and it got crushed because everyone anticipated it. And that happens. But the pattern since then has been more, getting long into any weakness prior to Thanksgiving and selling out either Wednesday before or Friday before, and not lingering into, that Monday afterwards. So it's really look for some weakness heading into the holiday and take some profits coming out of it.
We've been on the line with Jeff Hirsch. He's the author of the Stock Traders Almanac, a must-read for any active trader/investor. Jeff, thanks a lot. We'll speak to you again soon.
Thanks, gentlemen. Have a great day.
Okay, S&Ps hit that mid-range on the day, backed off a little bit, but trying to get back over 25, 69.50. That's mid-range on the day. Dennis, did we cover any 13Fs or?
No, we didn't. And, always, the 13F that everybody follows is obviously Warren, Berkshire Hathaway. The only relevant thing, Spencer, I really saw was the dumping of the IBM or dumping the majority of his IBM position.
From Berkshire, yeah. I believe he converted his Bank of America notes into stock. He cut his stake in IBM. He increased his stake in Synchrony Financial (SYF) by 3 million shares. Now owns about 20 million shares of that. Increased his stake in Apple and dissolved his stake in WBC.
IBM traded down 1%. It got hit last night on this action of the 146 handle, then bounced back. What do you think? Like, IBM is interesting to me here because, and I don't know if I can jump on board just because could be a value trap, but it's funny how the media, when this thing went up to 160, 161, 162, everybody's loving it. Now it's come all the way back down. Everybody hates it again. They all just chase price. Fill the gap here, Joel. Is this interesting to you, or now Warren's been dumping? Is this just a perennial dog and going to continue to lower forever?
Well, you know me, how I picky with my price here. 147.49. That was your low from yesterday. You're trading below that right now. So gap fill would take you down to 147.12. That was the high. So I'll see what happens at 147. Maybe come down here, fill the gap, and then if it can catch its breath for a day or two, maybe try it for a little bit of a swing trade. Longer term, I mean, if Warren's out, I'm out too. So I don't know
what the problem is, and I'm not an IBM. I was in it at one time and I sold it too. And you know why? Because I feel like it's such a big company and they haven't figured it out. I mean, let's think about this, for instance. I watched IBM with Watson on Jeopardy. What was that, 10 years ago that they had Watson going? On the AI part of it?
I watched that too.
Was it like 10 years ago, though?
Let me look it up because now I'm curious. But yeah,
they were one of the
at least 10 years ago.
They were one of the first companies really getting into the AI. With Watson, and they never really went any further with it. I mean, they were all over it. They should have been the leader here. And now, yes, they still have an AI presence. Yes, they still have Watson. Yes, they still have a business model around in there. But, I mean, they were the first ones on this. You got, the brains at IBM. Why are they not the leader in AI? Now, when you think AI, you don't even really think of IBM. You think of, Facebook's and Apple, and Google are all going to be right there, obviously. But, IBM is a passing thought with AI. They had Watson how many years ago,
Actually,
Spencer?
It was 2011, so we're both...
Okay, well, 6 years ago. So they should have been the leader here, and they're not. And, that's a problem. And that's why I think I just don't want to go and jump in IBM because they were one of the first produced anything of a a reasonable business model around it. It hasn't become one of their major sources of revenue. I think AI is the future. I think the companies that are involved in AI are going to be big, and some people are betting on IBM, saying they're going to figure it out. Well, they've been on it for 10 years and they haven't figured it out. So I don't know if they are going to figure it out. And I think that's why I don't think I'm going to invest in IBM.
Okay, all right. Same here. I do like the gap fill here if we get into the lower at 147 handle. Dennis, we went the whole show without mentioning General Electric.
You had to mention it on me.
I did. And for a couple of reasons. My main reason is, okay, remember during the financial crisis when this stock was going down, who came to the rescue and made a big investment in it when it was, come on, my monthly's not going back far enough. Who came and made a huge investment getting some preferred stock at a discount? Do you remember who did that?
It was Warren.
It was Warren.
Yeah.
You think he's licking his chops here?
That he comes in and defends it. I mean, that's what it needs. Yeah. I don't know. I think Warren, selling his IBM, maybe he's, a little bit more scared of this situation too. So that's what GE needs, though. It needs a vote of confidence. It doesn't have that right now. And that's why it continues to go down every day. I mean, this is an epic collapse here now for General Electric. It's in a free fall, and it needs somebody to come back and say, hey, we believe in this company. And that's the biggest issue for GE. And until it gets that, it's going to be dead money or even, losing you money. So one thing I did was yesterday, I started shorting some of the traded bonds against my GE position. And the reason for that is they haven't really went down yet. And, if you want to look at these actually, you got to watch, though, when you're shorting these things, because the locates can sometimes be expensive. So you make sure you check your cost of borrow in your retail broker. So I checked a couple different brokers before I actually found one that was reasonable. First one I looked at. So I'm looking at these three traded bonds: GEB, GEK, and GE. What's the other one? Is it H? Yeah, GEH. So if you look at these charts, these things haven't went down at all. So, I know the GEK went down yesterday, but just went ex-dividend. So that was the main reason, it just went down 20, 30 cents because it actually went ex-dividend. But really, you're talking about, these things, you look at the weeklies on like GEK, for instance, the thing's like 50 cents off its high of the move. So I just look at it. Do you want to loan GE money at 4.7%? Because that's what, if you're buying this, that's what you're doing. And I'm looking at that chart and saying, I wouldn't loan GE at 4.7%. So that's why I shorted these. And, again, cost of borrow can be an issue. So make sure you have a cheap cost of borrow. I've actually got them pretty cheap on now, but I might just hold these for a bit just in case it really starts to get ugly. They will eventually start to hit the bonds. I mean, if it starts to bounce back, these things, might go back up to the way they were. So you get GEK, you see, okay, well, this could go back up over $25. So I see like 50 cents of risk. For potential, if you look back to October, in GEK in October 2016 when they were hitting it, it got down to $23. Now that might have been interest rate concerns and different issues like that. But when credit, becomes an issue, they will eventually start to hit these things too. So if you're really bearish GE and you think it's in trouble, the best way to play it, I think, is short these things.
All right, 9:00, Spencer. You want to wrap up Wednesday's exciting edition and preview what's on the docket for tomorrow?
Hey, we didn't even get to discuss Jim Chanos going on adding to his Tesla store yesterday. But oh well, another day, another dollar. Maybe we'll get to it tomorrow if we have time. As far as tomorrow's guest, that'll be Dave Landry. He is a trader, so he'll be able to come on and talk to us about what he's seeing in the market right now and what trades he's been making. I don't think we've had Dave on for a while, so it'll be nice to get his takes. His site is davelandry.com. If you missed any part of our show today, you can catch the whole thing again on youtube.com/BenzingaTV or by going to our podcast on iTunes, SoundCloud, and on Stitcher by searching for Benzinga or PreMarket. Don't forget to join our live chat every morning. PreMarket.benzinga.com is where that is at. Thank you, Jeff Hirsch, for joining us today. Thank you to all of our guests and all of our listeners. Hope everyone has a good rest of the day. We'll be back with you on Thursday.